G'day legends, and welcome back to another video. With just 24 hours away until the monthly candle close, the risk of a bearish engulfing candle forming on the monthly and a breakdown of the major daily support at 107,000 are very real. The loss of this major daily support will trigger the beginning of the next leg down, which may take Bitcoin as low as 100,000. In today's video, we are doing a comprehensive macro and short-term analysis discussing the recent correction and pullback into this major support, what is expected next, how Bitcoin could bounce, and what we are watching for the extended correction. We'll also be taking a look at the upcoming monthly candle close, which is occurring in under 24 hours, discussing what we need to see for a good close and what would constitute a bad close for Bitcoin. We'll also be taking a look at the 2-week chart, the weekly chart, the immediate short-term and daily price action, as well as the total cryptocurrency market cap. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you were interested in, you can join us on Telegram. This is the first link down below, getting access to charts, updates, videos, educational posts, news events, and everything you need to stay low to cryptocurrency with Bitcoin and the relevant economic news. Go ahead and check it out. It is the pinned comment down below. Let's go ahead and jump into it. So taking a look at Bitcoin, we can see Bitcoin has essentially completed that downward corrective move we were discussing in our prior videos. We showed you this expectation from 2 videos ago, which was a rejection from that $116,000 level. You can see marked out right over here with an expected downward leg into that $107,000 level, which is exactly what we saw for Bitcoin. We were able to snag an amazing trade here in the VIP channel for that downward move, which is fantastic. Of course, a great short, and you can see if you've been following the channel, you would have caught a nice move on that too. You can see with this move, we are now retesting this major point of support at 107,000. This is a level of support on the daily chart. You can see we held here on the daily for quite some time. We held again on the daily. We've now bounced again on the daily. The daily close above this level is a good sign the support is currently holding. So we have not yet actually broken this low. This is still a point of support we are going to be discussing. So we're not in this bearish transition phase. We're still in this neutral to bearish phase. We have actually just maintained above this support on the daily. A loss of this level will trigger that next move down. We'll discuss that in the video today. Let's take a look at our market data, 24-hour volume and liquidations. Volume jumping 7.5%. We're at 360 billion. Liquidations jumping a massive amount, 72% at 1,774 million. So 1.07 billion, absolutely skyrocketing. 953 of that coming from long positions, 119 coming from short, as Bitcoin drops into this major point of liquidity. Of course, anytime we see these moves into sell-side liquidity, we see a massive amount of liquidations occur. Often that does result in short-term reversals. So there is a chance Bitcoin does actually bounce here, and we'll be discussing that in the video today, of course. Moving over to the S&P 500 and the DXY. The DXY pushing upwards ever so slightly again. The interest rate data came out as an interest rate drop, but the expectations were still very cloudy, very uncertain. There was some talk about future interest rate reductions, but there was no clarity in regards to whether that will be in December or in 2026 or how they're even going to go forward. All they've said really was, we're looking to stop QT, we're looking to potentially drop interest rates more, but it all comes back to how that economic data is developing. They had the government shutdown, so they didn't have access to all of the data they really wanted to. So I think they played it a little bit more safe by dropping rates a little bit, but that doesn't necessarily mean we're going to see these consecutive interest rate drops. If anything, if they start to talk about when they could look to pause rates again, or when they would be more hesitant on dropping interest rates, that actually could shift perceived systematic risk in the market downward, and we can actually see the market correct. So although sometimes we see interest rate reductions on the short term, the market doesn't always respond bullish to those, because the market moves based on moves more based on the perception of future risk, and then it prices that in now. So the market is generally a reflection of the economic environment now, what is expected later. Let's take a look at the S&P 500. Potential local top over here again. We've still got that bearish divergence developing. We are looking again, provided we remain above 6,800 for continuations higher to 7,000. If we drop back below 6,800, that is going to be a deviation setup, and that would be the start of the downward move. So if you want to wait for the beginning of the downward move, wait for the deviation setup. Until then, above 6,800, bullish reversals and continuations to 7,000 is very much in play. That is it, guys. Let's jump into the crux of today's analysis. Like we said, we're going to be taking a look at the short term, discussing this downward move. What does it mean? Where is Bitcoin going next? What are the key levels you should be paying attention to? We're going to be discussing the next leg down. You know, what would that look like? Where would our targets be? Would that start a bear market? We'll also be taking a look at the move up. What needs to happen for the buyers to send the price to a new all-time high? We're covering everything. Before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BigX. The exchange links are down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. You'll support me making the content, and you'll support yourself in your trading journey. Trading on exchanges I use and I trust. We'll play a quick ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay team, let's go ahead and jump into it. Now I want to start on the monthly candle, because that is occurring tomorrow in 24 hours. Before I do, really quickly, everyone who signs up to BitUnix, or anyone who has already signed up to BitUnix under my link, will get access to our monthly campaigns. We currently have this going on for the next 30 days, $60,000 in rewards. You can go ahead and check out more information in the pinned comment of the free channel or in the VIP channel if you are in there. Of course, there's access to everyone to get those exclusive rewards. Let's go ahead and jump into it. Monthly candle close. That is occurring in 24 hours. Now, what is very interesting, if you go to the data here and take a look at historical returns for Bitcoin, October has always historically been a very bullish month for Bitcoin. In fact, October is one of the most bullish months for Bitcoin if we take a look at historical performance. Now, of course, if we take a look at November, that is generally more bullish, but it does take into consideration that near 500% gain month in 2013. So we're looking at the median amount, not just the average. The median amount is actually October when it comes to the most highest performing month of the year. Now, we actually saw a negative month in October. Now, we've got 24 hours. I don't think Bitcoin is going to pump 5% in 24 hours. It is likely we're going to be closing our red. So it's pretty interesting how everyone expected October, the market to go up, but we're telling you there's a chance October was going to be at the top, with the 6th of October top, of course, played out perfectly, and we have seen a correction since. But it's very important to note that just because we've seen a correction from these highs in October, that doesn't mean we're going to see continuations lower. We still need to trade based on a level-by-level basis. We still need to see those bearish triggers activate to send the price lower. We'll be discussing that in the video today. So let's take a look at the monthly candle close, because this is happening in 24 hours. Essentially, all we are watching for the monthly candle close, and it's very simple. We are simply zooming in and we are watching this horizontal point. Now, the reason this is so important is because this was the opening price of our last monthly. We can see right over here, right at this point. This is sitting around 108,200 US dollars. We're currently sitting about $200-300 above that. If we drop and close below this level, we will be seeing a bearish engulfing candle, and that is likely to be a reversal candle, signifying the potential for continuations lower are on the cards. Now, furthermore, the monthly candle below this level would also likely result in Bitcoin closing below that daily low range here, which we know to be a trigger for an extended correction to 100 to 98,000. We'll discuss that in today's video. You're also probably wondering, what are all these boxes here vertically on the right, this gray, green, and red zone? We'll discuss that in our short-term analysis if you aren't aware, but these are our ranges of horizontal price action on the vertical scale, which represents the strength of the trend or the bias of the trend at these particular horizontal price points. Moving back to the monthly chart, that is essentially all we are paying attention to. There's not much more to talk about on the monthly chart. Generally don't really use monthly charts to predict where the price is going, and more just a reflection of how the price has performed and can be used as confluence to then expect how the price may potentially continue to perform moving into the next week or the next month, etc. What we are paying attention to very closely is the 2-week and the 1-week chart. Let's start on the 2-week chart, keeping it very simple. The 2-week chart, we have seen a few things. Number one, we have seen the 2-week RSI breakdown, or we're coming very close to see the 2-week RSI breakdown. We had that 1-week RSI breakdown, you can see represented by this uptrend here a few weeks ago, representing a negative momentum shift. The 2-week RSI breakdown is developing, represented again by the symmetrical triangle formation, signifying that the higher time frame momentum is beginning to again come back down. We are turning more negative. That exhaustion which has been developing through this period of around 2 months is really coming into effect, pushing volatility down and pushing the momentum, or the positive momentum, downwards, facilitating potential further corrections. Now, when we're looking at the 2-week chart, the real important levels we're watching is the bull market support band. The reason we're watching that again is if we look at when the bull market started all the way back over here, we have been above the bull market support band the entire time, right? 3 instances on the 2-week chart, we have come and retested it, and 3 instances we have bounced. Number 2, we are watching the downtrend on the RSI. The downtrend in the RSI being the bullish trigger, the bull market support band being the bearish trigger, meaning the break of the bull market support band at around 103,000 would trigger a further correction, likely into the upper band or the 50 EMA. This is actually sub 90,000. Whereas the breakout of the RSI would signify a positive momentum shift, suggesting that the exhaustion that has been developing within this period of price action has been absorbed and the buyers are back in control, which would facilitate a continuation into a new all-time high. That would need to occur. I'm going to make it very clear. For us to see that, we would need to see the RSI break above prior to losing this 103,000 level. If either of these things occur, they invalidate the other, okay? So pay attention to that. Let's go ahead and jump over to the weekly chart. Now, the weekly chart is looking a little bit more grim, of course. We have seen the breakdown on the symmetrical triangle for Bitcoin signifying a negative momentum shift. If we take a look at when that happened, that negative momentum shift happened literally on the 6th of October, the top for Bitcoin. So since the 6th of October, momentum on the weekly has been downward facing over here. We can also see on the weekly chart, we have managed to remain above the Gaussian channel and 50 EMA the entire bull run. The breakdown of the Gaussian channel and 50 EMA would trigger a higher time frame macro correction, potentially into the midline 90,000, potentially into the lower band 70 to 80,000, and worst case scenario into the 200 moving average around 65 to 70,000. Those are worst case scenario targets if these levels were to break down. For us to be confident in this downward move, we would need to see again this $107,000 level lost. We would need to see the 50 EMA and Gaussian channel upper band lost, and we would need to see this base of support on the RSI, which we have been bouncing from, right, for the last 2 years, bounce, bounce, and bounce, breakdown. Only when those things happen would we expect steeper corrections. Until then, the potential for Bitcoin to bounce and move back into new all-time highs, although are unlikely, is still possible. So let's take a look at that. What we can see here, guys, I'm going to make it very, very simple. We have got our horizontal levels annotated. The key horizontal levels we are watching are going to be this one here, which is 118,000, and this one here, which is 107,000. These are our most important levels of horizontal support and resistance, because if we take a look at the reactions in the price action above and below these levels, we see two things. We see the price enter a more volatile period, which we've seen these larger moves into new all-time highs. And this is a major monthly point of support where if lost, we will know demand has fallen and the price will likely see a increase of bearish volatility into our sell side liquidity, which is 98 to 100,000. So the risk of corrections massively increase below 107, and the potential for new all-time highs massively increase above 118. If we take a look at these short-term horizontal ranges just on a short-term chart, you can see, looking at the price action here, we have annotated our ranges. This is going to be our bearish to neutral range, as we discussed in yesterday's video. The reason why it's neutral is because we are below a major bullish trigger and above a major bearish trigger. The reason why it's neutral to bearish, however, is because the trend on the weekly is downward sloping, or at least we're seeing exhaustion, which could facilitate which could extend into this downward sloping macro trend. If we're looking at bullish reversals, we look for triggers above 118. This is going to be shifting into bull territory, and above 120 is when we into bullish territory for macro continuations into all-time highs, because by doing that, we would invalidate the risk of the 2-week breakdown of the bull market support band, but most importantly, we would actually broken out on the RSI, signifying a positive momentum shift, which would take Bitcoin higher. So we have the confluence there. In terms of the downward trend, again, like we said already, breaking 103 would result in the 2-week bull market support band breaking down. We would also trigger that move into sell side liquidity, which would result in the Gaussian channel and 50 EMA being retested. Remember, if we go to that weekly chart really quickly, let's just go to a weekly chart here, and we take a look at that 50 EMA, and we take a look at the Gaussian channel, look where that is sitting. We can see that it's sitting on and above 98 to 100,000. So the loss of this level and the breakdown into that level runs the risk again of us breaking back into the 50 EMA and Gaussian channel, where if we do so with the horizontal weekly low of the RSI having broken down, we will see the price continue lower. So we run the risk of all that. Now, we've said in our prior video, and we'll say again, and today's video is quite complicated. There's a lot to talk about, and there's a lot of different elements. Anytime the market moves into these transitionary phases, these pivot points, these points where the price has just seen a large rally, a potential macro reversal point, and we're seeing diminishing strength or building weakness in an uptrend, it is always going to be polarizing. There are going to be people who are saying, no, this is just a bear trap, we're going high. There are going to be people saying, no, this is the start of the bear market. I'd urge you very much to ignore everyone and just simply focus on the probabilities and the overall strength of the trend. There's no need to predict when the chart tells you everything you need to actually trade. It tells you everything you need to make the decisions you need to make. When we're looking at this higher time frame chart, it is abundantly clear for Bitcoin to even come back into these levels, we need to break the current trend we have seen since the 6th of October. This is our break of structure. This was our deviation range high. We had bearish momentum in the short term. We saw a flash correction into support. The daily low has been held. Since then, we have come up, established a lower high, and we have since rejected from that lower high. That tells us immediately that this trend is downward sloping. Until we break through that 116, 117, 118 level, there is absolutely no expectation for a move back into these highs. That doesn't necessarily mean we're going to go lower. It could mean we're just going to push sideways because we are at support, but at least the potential for new highs are not realistic until we break through these points of resistance. So you need to trade from a level by level basis, or at least that is what I do. Let's wrap that up, guys. Let's jump over to the total cryptocurrency market cap now. So pay close attention to that. Actually, really quickly, I do want to add on the short term, there is a chance Bitcoin bounces here again. For this to happen, It doesn't really matter if we see a short-term bounce. For us to be confident this short-term bounce will sustain, we need to get back above 110. So 110 is the level we are watching. This prior low over here, this 110 level. If we don't get back above 110, we are going lower. So if we see any sort of move like that into the VRPB gap, we will likely see the price correct. If we break back above, we are then watching for this level to then retest as support for continuations back into highs. If we don't see any of that, we'll then just expect lower for the price action. Let's quickly sum up the total cryptocurrency market. This was also another chart we are watching. The weekly candle closing 3 days. Now, this is a very important chart. The weekly candle close below we're not going to go too much detail today. We'll discuss it on the weekly candle. 3.65 trillion, okay? Just know that number. Weekly close below there, the market's going lower. The probabilities for corrections become significantly higher than reversals back into all-time highs. This is the prior weekly range. This is a macro structure. Breaking back below, we have macro deviation. We are likely going to see corrections at least to the sell side liquidity or the breaker structure. Either way, we are going to see corrections of the market to 98 to 100,000, or worst case, potentially even lower if this level breaks. This is the weekly trend for Bitcoin. Some people are saying Bitcoin hasn't even seen a bull market, or the cryptocurrency market hasn't even seen a bull market. The reality is the cryptocurrency market did see a bull market. We saw rallies from 720 billion of nearly, 6x. The market 6x did, 500% over the course of 2 to 3 years. It is only really the altcoin market that has suffered, but cryptocurrency as a whole had a fantastic run. If this is the end of it, there is absolutely nothing wrong with that. We've seen a fantastic run for the market. If we have to go into a healthy correction before we continue upwards eventually, I don't think that's going to hurt anyone on the macro unless they are over leveraged or they are emotionally buying tops of every single moves, etc., etc. Anyway, guys, before I start rambling, we'll leave it there. Have a fantastic rest of your day. We'll catch you guys maybe tomorrow. If not, we'll see you guys on Monday for that weekly candle close. Have a fantastic day. I'll catch you all then. Bye.